This week on the VC React podcast, it's Gitex week. Everyone is in Dubai and every booth says AI. But there's even bigger news from Dubai, a second tech IPO. Dubizzle is going public at a $2 billion valuation. It's not AI, it's not fintech, it's classifieds and it's profitable. Can profitability still excite investors when the sector is not trendy anymore? Over in Bahrain and Riyadh, Investcorp just closed a $750 million fund to back growth stage tech across the GCC and China. Why China? Why now? And which industries will this fund really focus on? And finally, from the streets of Casablanca, Chari raises $12 million to turn corner shops into fintech hubs and launch a banking-as-a-service platform. But can one startup really handle logistics, payment, lending, and infrastructure? 4 stories and 1 rapid-fire conversation. Let's react. Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, funds, and investment rounds. Let's jump into it with our guests for today. Mustafa Nabelsi, General Partner at 2Pi Ventures, Xavier Kris, CEO at IMX Funds, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. This episode is brought to you by OCTA, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
OCTA changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, OCTA's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use OCTA. OCTA learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Careem, Lean Technologies, and Outgram rely on OCTA to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use OCTA. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareocta.com. Our weekly news is brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Okay, Jamie, did you get a chance to go to Gitex this week?
I think I had ample opportunity to go. Did I go? No. I had my fill last year. I think I actually actively avoided it like the plague, truthfully. Not to speak overly disparagingly about it, but I don't think I had the most enjoyable experience at it last year, truthfully. So I don't know. It's too big for me. I'm not the one who's supposed to enjoy it, you know.
How about you, Mustafa, Xavier? Did you go to Gitex this week?
Yes, I actually went to a couple of days to expand North Star, the other event. Traffic is not that bad because it's kind of far from the main event and it's a bit different. I really enjoyed this time because it's the way it's structured, the kind of the different halls and different teams. If you want something, you can get to it. Going in there randomly might be a challenge because there's so much to see and you will be kind of, it's almost diluted in all these halls and these spaces. But I think if you know something specific, like specific market, specific country, emerging markets, you can go there and actually enjoy the experience. So I loved it. I didn't go to the main Gitex.
Okay.
I've got to say, I did go this year and I thoroughly enjoyed it. You know, with the backlash on social media regarding traffic issues and the metro being crowded and the CEOs, being jet lagged. I think that's just all part and parcel of it. And then, of course, they're going to be teething problems with so much new infrastructure being built in Dubai and in and around the harbor right now. But I think it's hard to ignore an expo that has 6,800 companies, 2,000 startups from 180 countries. I mean, it really is quite exceptional. And I think just reinforces Dubai and the UAE as being at the heart of the technological revolution that's taking place.
Is it still at the World Trade Center?
Yes, it is. As I understand, it will be moving to Expo next year.
I mean, that's the point of the complaining, I guess, because it's too crowded in a very small area. And if they move it, that would be a game changer, I think.
And I think some of the talks were great. I think in terms of the attendees, there's probably a little confusion. It is a B2B focused expo. I think there are a lot of consumers there expecting, goodie bags and handouts, which didn't occur. But some of the talks were extraordinary. Sam Altman sharing, his understanding, his vision was very entertaining indeed. And I think, as the business of the expo refocuses more on the B2B element from a networking standpoint, as opposed to the consumer angle, I think it'll be an expo that you simply cannot avoid, because all the right people are there from organizations on a global basis with whom to do business. And it's great that it's here in our backyard.
What I really like this time, especially from an investor point of view, is that the organization of the meetings, setting up chats with startups, having the right kind of scheduling in place, networking events. I think all of that was well done from the Expand North Star point of view. So I really like that point as well.
Yeah, I was going to say, as Jamie has nothing to say about Gitex because he couldn't be bothered attending, I did want to just, for Jamie's benefit, signal something that Altman did say during the discussions, and that was, a kid born today will never be smarter than AI ever. And that certainly gave me pause for thought.
I don't know though. Sam loves to speak in these sort of grandiose, sort of colossal. Like, what is smarter? Like, how do we define what's smarter? Like, ChatGPT often can't add. Like, how do we, do we define smarter as sort of, just because it's trained on the entire corpus and history of everything that's potentially ever been written? But if we look at scientific discoveries, for example, AI hasn't been capable of doing anything necessarily. Obviously, we have AlphaGo, but with much direction as far as the Demesis House and the team there is concerned. So, look, Sam loves speaking in these grand, sweeping statements, which obviously captured the imagination of sovereign wealth funds around the world and people with the deepest pockets imaginable. And he's painting the picture of a future which very well may come to pass, but I think he's always thinking.
From my understanding, Jamie, when they consider the term smart, they actually use you as the threshold and the benchmark. So I've got no doubt that AI will be smarter.
Well, I mean, I don't think you need to look to AI for that benchmark. I think you could look at sort of a grade 4 or grade 5 student in school. And if that's the benchmark that we're using as far as that's concerned, then it's a flawed metric, as are most of these benchmarks.
I have one comment on Sam Altman. He speaks with so much confidence that his statements are the ultimate truth. And then a year, 2, 3 years later, he changes his mind and he says, no, I was wrong, which is admirable. But at the end of the day, that confidence that he speaks with when he says those statements, I wish he would say, this is what I believe is true today. I might change my mind in the future. And maybe this should be understood, but the confidence he speaks with is,
we're all studying something, Ahmad, and I think there is nothing to take away from him in that respect.
Yeah.
I don't think, and a lot of us would have expected the growth, the adoption, and the advances, even within OpenAI over the last 3 years. I think it's quite extraordinary that it's just become so embedded in a lot of our workflows. So, frankly, and personally, I'm excited about what the next 3 years brings.
Yeah. Okay, Jamie. Move us to the next story. I hear there's a new IPO in Dubai.
I was going to say, it feels like quite a come down to discuss classifieds now in the context of which we just discussed. But we've Dubizzle, who've quietly amassed, I suppose, something of an empire as far as that sort of space is concerned regionally. Obviously, you have Dubizzle, you have Buyers as well, their property vertical, and they've sort of slowly been acquiring Drive Arabia, obviously, in the sort of the vehicle mobility side of things, Property Monitor, I think they acquired earlier this year as well. So, Yeah, news is broken that they are going to be debuting, and this was well signaled. I think we've all sort of known that this was coming in the pipeline for pretty much since the beginning of the year. They're looking, the listing could value the company at about $2 billion. It seems it's going to offer just above kind of 30% of the share capital. Obviously, the major shareholder here is Prosus. It's committed to investing 100 million in the IPO as well. Familiar sort of host of underwriters. You've Emirates, MBD, Goldman Sachs, etc. involved in things. But yeah, you flagged in the introduction, Ahmed, not the sexiest of industries. Explain yourself.
Well, it's all about AI today. So it's classified, not exactly the hottest space, right? It's AI, fintech, proptech is the the sexiest trends now. What would you expect from this IPO, given that it's a profitable company? Would profitability compensate for not being trendy? I don't know. Xavier, what do you think?
There's a lot to be said for traditional businesses if they can adapt and adopt and integrate, AI into their workflows. I have a few issues with this IPO, and I've got to say in advance, I have no inside knowledge as to what's taking place here. But you're listing a business purportedly, I should say, on 8 times trailing 9x forward earnings. Yes, it's profitable, noting that it wasn't profitable last year, so it is rather opportune that it is now profitable this year, and hence they're going for an IPO. Selling down 33% of the book. I believe part of that is new money inflow. Part of that will be secondaries as well. How much of those secondaries is Prosus selling down? In which case it's fairly easy to say, oh, by the way, we're investing $100 million. But actually, based on the fact that, the value of their stock as it stands now on a $2 billion basis is, $1.3 billion, they can afford to spend $100 million to invest in the process. Right? Particularly, I think, as they're all in cost, which is going back now over sort of a 12-year period because it's been grandfathered through the various mergers. I think their all-in cost is probably in the region of 320 million. So they've got a nice upside there. I would be afraid that there may then be, following IPO, a rebalancing of the Prosus portfolio, which we've seen before with them, with Tencent, with JD.com. You want to ask their retail shareholders what they think about, those rebalancing acts, which are done through an accelerated book order, ABO. And you look at the JD stock since that ABO, sort of June 2022, it's never recovered, down 60-odd%. And similarly with Tencent, I think Tencent has got back to the value that the ABO was conducted at by Prosus in April of this year, when it was conducted back in June 2022 as well. It was over a number of months, but using June 2022 as the anchor point. So I would suggest buyer beware. My concern is that if they do an ABO and they sell secondary stock once the business is listed, that stock will be picked up by sovereign wealth funds who will be left holding the bag. And if I was a retail investor, I'd run a mile.
It's very interesting, Xavier, because I was worried too. And let me rephrase this in a different question to Mustafa. So Mustafa, assuming the IPO performs well, how much of that success would really flow back into the regional ecosystem? Do we celebrate this as a MENA win, or as suggested by Xavier, it's a liquidity event for Prosus, nothing more? What do you think?
Super valid points. I think if we take a different point of view or perspective on this, I think, and also it taps into what you mentioned, it's not trendy, it's not AI, it's not fintech, it's your typical traditional business. But if you look back, it's a journey that started 8 or plus years ago, where things weren't digitized in the GCC or in the MENA region well enough. So they started, I think, at the right time. Back then, it was potentially trendy to start digital tools or systems that will help locals and local communities. Their journey definitely could have had more innovation and more kind of adaptation to trendy and recent technologies. But I think, and again, I base it back on the journey because in that journey, a lot of people got benefited. The founders, the early investors, the employees, people that actually went early on and then benefited from the growth, even though the end result might benefit mainly Prosus. But when you started to where you are now, a lot of people have achieved many things during that journey from Dubizzle, including the founders, I would assume. So the impact is more of the intangible aspect. First, you're encouraging more entrepreneurs to go to take this path. We don't have like 100 IPOs every day in the region. So even though it is the economics of it aren't the best, but I think the story and the impact will encourage. And I've been in the ecosystem. I was talking to you about like 10, 12 years ago. IPOs were just kind of imaginary thing that we dreamed about. Now it's actually happening. Not the ideal scenarios, but I think there are two. Just to answer your question in a short way, is basically two factors: the intangible impact on the ecosystem as entrepreneurs get more inspired, whether they do AI or they do other businesses. There is a path to success that they can see now. And the other aspect is the impact, or I would say the benefit that happened to people involved in the Dubizzle journey since the start to today. I would rather focus on the journey than on the current scenario, which we might have points on and arguments, but that's basically what I think in terms of that specific aspect.
I think you're spot on in terms of a North Star, if you pardon the pun, being there for founders who take a bet, have a gamble, invest their time, their energy, their passion into building a business. I think it's fantastic to show that there is a liquidity event, there is light at the end of the tunnel, and there is a wealth generation event that takes place. My concern comes more from a retail investor perspective, who more often than not are the ones left holding the bag. And my concern is it does the local exchanges no favors whatsoever as they're trying to build confidence and reputation. If similar sort of processes were to occur as has happened previously. It is a business that is highly dependent on Dubai real estate and its growth with such a significant amount of its revenue, because the business is not yet truly diversified, particularly when you compare it to Rightmove in the UK, which is sort of 26% of its revenues outside of the classified, or Domain in Australia, which is now over 50% diversified. Domain's still only trading on 6.5, I believe, times. Rightmove is higher, but very high subscription base, which underpins its valuation. If Dubizzle is to justify that premium, and it is a premium on the current price, it's got to grow and it's got to diversify quickly. My concern, because it is so reliant on the Dubai real estate sector, is that if property prices in 2027, and I'm sure you're all aware of the predictions that they're suggesting stagnant at best is the overall consensus. Now, we know that the overall consensus in terms of the real estate market in this part of the world has been wrong 100% of the time. But the current consensus is that it is plateau or decline in 2027.
There's also in Saudi the biggest, I think, real estate boom that is happening right now and might extend for the next 5 years. So maybe if they expand into there, they would survive that.
Yeah, but we know that's not an overnight process, right?
Yes, of course.
And, so if you're looking at current revenue, and we all know, analysts and, brokers, are not going to take 4 or 5 year views on these projects. They're going to look week to week, quarter to quarter. And if the Dubai market goes to zero, the value of this business goes from 2 billion to 680 million. Okay. That's the impact that moving from a 12 to 40% growth rate that we're experiencing right now to flatline has on this business as it currently stands, which is why diversification is key, which is why all your bets are on how quickly they can diversify those revenue streams, because right now there is zero protection.
I think which is kind of interesting to look at, because they went deeper into the local market of UAE, not wider in the neighboring markets. And I think maybe that helped them focus more on generating sustainable revenues and maybe profits. But I think, as you mentioned, Ahmed, as also Xavier, is that if you now want to expand, it's really about execution and knowing the local market challenges. It's not about the platform or the system or the tools or the product. It's more about the on-ground execution. I live in Saudi, and I think there are logistical and operational challenges that you need to go in early to then become a leader in the sector. I've seen examples like Buyut, Haraj, all of these, and Aqar as well. These companies, they have, I would say, an amazing product, right? The technology is never the problem. Once they started the execution on the ground, a lot of complication in terms of how the market works, the regulations, how do you make your money, how do you become sustainable, how do you scale? And it's I think if they want to, as you mentioned, Xavier, if they want to grow, they need to start digging into the neighboring market, especially Saudi, where it has a big boom in the real estate, and it's going to continue for the next. You have the World Cup, you have Expo, you have all of these major events that will help you capitalize on that growth.
Let's look at this from a different angle, and we touched on that a little bit in the beginning. Let's talk about the market in general, or the ecosystem. We've seen Careem got acquired by Uber and then reacquired by E&. Property Finder stayed private, but they got debt to buy early investors. Dubizzle, Talabat went public. Dubizzle is going public as well. Which of these paths, acquisition, buyback, or IPO, do you think is the healthiest for the MENA ecosystem as an emerging market?
From my perspective, you're right, Ahmed. This goes to the crux of the issue in terms of how do MEA businesses or MENA businesses expand beyond the region. The focus has been for too long, the businesses here are focused on ensuring amazing localization without any focus on internationalization. And that's why there is such a minority of businesses that are originating here have over 50% of their revenues from overseas, right? It's a tiny, tiny proportion. And that's what needs to change, because otherwise you do get into those scenarios where there is a buyback, there is the sovereign wealth funds come back in to take control so they can support that business and keep it as a flagship and keep it generating and growing, albeit perhaps not at the 30-40% rate, but at a nice conservative 5 to 10%. And that's wonderful. But if you're an investor coming in now with new money, you want those growth trends to continue. And for them to continue, you have to internationalize the product. And you have to have a management team and a founder team that's capable of internationalizing those products. Because right now, that's not the focus, and that's not what so many of these businesses, and I'm not speaking for Dubizzle, they may already have that strategy in place, but so many businesses that we see don't have that structure in place.
I think it really depends on the objective and what's good for the founder versus the ecosystem. In my opinion, I think IPO is definitely, I would say, the more exciting part of the journey for other entrepreneurs to aspire to. Acquisition as well, but I think with acquisition you have sort of a value leakage, right? So it depends on who's acquiring who, and then the value would be leaked outside of the ecosystem potentially. They do bring know-how when they acquire, like Uber you mentioned. I'm sure it had a lot of potential good impact on Careem scaling and optimizing and fixing operations. But I think he will start leaking the value of the current local innovation and market. So although IPO is they're very rare in the region, but it shows a potential success journey or success destination for startups and founders to aspire to. and it will keep evolving. We will have hopefully better IPO stories, better IPO cases as we go, as we grow the ecosystem. And to Xavier's point, 100%. If you don't start thinking about scaling beyond your boundaries and beyond your local market, even by the way, even if you diversify your revenue streams and you start to tap into multiple revenue stream within the local market, that's a good strategy, but still you have to think global. You have to think. We have a few examples from Egypt where they started to expand regionally, then potentially globally, and they got a lot of good growth. So, to that point as well, if we look at Canadian startups, some of the Canadian startups, I would say the market is similar to Saudi in terms of size and in terms of population, but they already had an ecosystem in place that pushed them to be international, maybe because they're neighboring the US. But you see things like Shopify and many other examples that went global, and that's when they made it. So I totally agree on that point.
Yeah, I love the concept of going global, and Xavier, spot on mentioning that. And for some reason, whenever we say global, we look west. But with this new story, we're going to look east with China. Jamie, tell us more about this. What's the new connection between GCC and China?
Yes, we have the wonderfully named Golden Horizon Fund, Golden Horizon Cooperation Fund, which is just sort of in keeping with this wonderful sort of Chinese naming convention that they have for many of these funds and initiatives which they put forward. But yes, this is rather interesting. So in Investcorp, as far as they're dipping their toes into the regional tech ecosystem, I think they led Salah's Series C a while back. I think it was $100 million. They invested, or no, that was Trucker Series C, I believe they led. I'm getting confused on the detail, but you can look it up. I don't have this in front of me, but the investor in Trucker
It is,
Salah.
it is Trucker.
Is it? It is Trucker. Okay, I've corrected
Yes.
myself. Okay, wonderful, fantastic. Not to spread disinformation. Thank you. Arbiter of truth there, Xavier. It's true. It's true. I've heard this. This does the rounds, so this tracks. But yeah, it's a $750 million fund launched with the China Investment Corporation. So they're looking at high growth companies from the GCC and from China in terms of sectoral coverage. Pretty broad remit, all things considered: consumer, healthcare, logistics, which seems pretty strategic. Business services, which is wonderfully opaque and vague as to necessarily what that entails. But yeah, they're looking at, pre-IPO companies, essentially 3 to 5 year exit time horizon. As far as LPs are concerned, familiar host of faces regionally. You have your fund of funds, you have SVC, you have Jeddah Fund, Bank of China as well, and there's some others, I'm sure, which haven't been disclosed. But yeah, the GCC-China corridor is an interesting one, I think.
Why China? Why now? That's simply put.
Geopolitical hedging.
Okay.
That, and also the fact that you want to tap into, I think potentially if this is done well, you will tap into two different markets with two different dynamics. And the GCC, you have massive transformation, massive focus on AR and digitization and kind of investment in the next generation technologies. And in the Chinese market, you have well-disciplined market manufacturing processes, and even in terms of digital and technology disciplines and advancement. So you're bridging between a transformative or transformational market and a well-established disciplined market to hopefully get the best of both worlds. So hopefully that will happen.
Yeah, makes sense. Getting more into industries that usually were overlooked by the West. We need that here in the MENA region, and China is the place to provide that for us. But the money is not only going in GCC, it's both ways. And I've seen on Investcorp website, I looked at their portfolio, they have already multiple Chinese companies. They have invested in China before for the past, I don't know, maybe 5-10 years. Xavier, what do you think?
I think, like a lot of these, sovereign to sovereign, if I can express it that way, deals and structures, I think it all makes great sense on paper. I think that you have cross-border synergies, you have the sovereign backing, you've got growth markets in each respect, on each side that benefits the other. You've got the exit clarity in terms of it being, effectively a pre-IPO fund at its essence. But then, of course, you do have, the ongoing geopolitical sensitivity. Market timing, 3 to 5 year time horizon is not long when you're talking about some of these sectors, and it is contingent on the current appetite for IPOs and the current bull run that we're on. I think most importantly, and this is just something that's Ahmad, as you pointed out, that there have been investments, but this is a much more intertwined approach to investment. And so what will be the cross-cultural integration challenges that are faced? Because they are very different in their approaches. And yeah, you guys may well have some direct experience in this regard, but I see that being as something that is not necessarily easily overcome in the short term.
The fund is targeting companies in both GCC and China. And those are two different markets, two different dynamics, way different than each other. How do you balance that as an investor? How do you balance that in one portfolio? How do you make decisions? And furthermore, if you are managing this fund, what industries or verticals you would focus on?
So the first point I would focus on as an investor, I would focus on, again, to the point of tapping into the strength of each market. And I think if there is a case that makes sense, either that serves the Chinese market or the GCC market, and it has potential to scale, I think that is the main point here. To the second part of the question, I think is related more into what is lacking in the GCC and what could be leveraged from the Chinese market or the Chinese technology advancements, things like EV and mobility, basically. If you want to push that agenda forward, hardware related stuff and AI/hardware components working together, logistic technologies and supply chains could be very important. Learning from that market and given the demands and the gaps in the GCC market. Things other than that could be smart cities, energy tech, and all of that. But I think the key point here is how do you get the best out of the two markets for potential growth?
Mustafa is spot on. You're targeting sectors that benefit the GCC from an economic diversification perspective. What is it that gives us the diversification and helps us balance our overall portfolio when looking at what China can bring to this region. So it may not necessarily be co-location of assets, but it may be what are the organizations that can help educate, train, and model GCC-based businesses.
The market, especially in Saudi, is really a good opportunity now because they're planning, for example, to invest almost 250 plus billions in renewable energy. And if you can make that marriage or that match, I think that would be a win-win situation. So that's one example of government-driven agenda and that aligns with this part of fund or this type of fund.
And I would say as an added point, though, if they really want to understand how to make this work, that we have the team available at IMX Funds that is more than happy to assist them through the process.
Okay, we have the experts here.
Subtle.
As I have to ask this, Investcorp have been known as a private equity firm with more traditional businesses like luxury fashion, like logistics, and now they're getting more into technology. And it seems that they're getting more into venture capital territories more than private equity. Do you think traditional PE style is what we need now in late stage tech in the MENA region because of their focus on, financial engineering and preparing the companies for IPO? Is that what we need today? PE firms getting into the VC territories?
No.
No. Why?
Oh, I've got to give a reason. The reason is that, guys, we've got to just focus on building strong businesses with strong foundations and not worry about financial engineering and structuring the exits. Let's just build some great businesses. Then we can focus on how we structure things, how we exit engineer. There's too much pressure on early stage companies right now to spend all their time thinking about what is the liquidity event, when is the liquidity event, what's the time horizon, what's the crystallization period. Forget that. Focus. Do what you're here to do. focus on your passion, and just build a brilliant business. Then we can worry about what happens afterwards.
Usually the other stuff just works out by itself, because most of the people will try to help you if you're a business, a successful
Amazing
business.
the amount of assistants and advisors you can accumulate once you are successful.
Of course. Mustafa?
I agree, because I think the magic is in the balance between the two ends of the spectrum. You have companies focusing too much on the product, forgetting the business and how to scale. And you have companies, as you mentioned, engineering liquidity and exits and all of this early on. So it's really about having this balance act, and you just build great products, solve real problems, do a proper business management, and then other things will follow. I think the key here is just solve real problems with innovation and great products. Now, for your question, PE getting into VC and vice versa, I think there has to be some kind of lines between the two hats that you put. In their case, they're doing potentially, I guess, a barbell strategy where they want to have a secured line, low risk, and then also they want to go into more risky ventures, getting into transformational markets like the GCC and others. But from ecosystem or startups and VC world, I think we just need to work side by side, not to damage the dynamics of the market. If you're pushing startups to be like traditional business early on, you're kind of diluting the whole message. So it's good to have money from the private equity firms, but it also has to be done the VC way or the startup way, basically. I don't know if that makes sense.
Totally agree. Yeah, Mustafa, absolutely 100% agree. Happy to take their money now, but let us manage it for you.
I like these side promotional messages from Xavier along the way.
Well, look,
He's always selling, as he mentioned in the beginning. We're all selling.
Yeah, of course, the PEs would like the 47x that IMX funds is able to achieve, but their investors and their institutions are going to be slightly dubious when they're purporting as a PE fund to be delivering 47x returns.
Well, 47, that's really good. Xavier, what company was that?
That is IMX funds. Thank you for asking, Ian. 196% annual IRR. Again, IMX funds, just to get listed in the first place.
We'll make sure to include subtitles as well. Just every time you mention IMX, we'll flash it up on screen with the link.
And I'm quite sure, Jamie, that I'll receive an invoice via email every time I mention IMX funds.
I have a counter here behind myself, so I have a clicker.
An ADGM-based venture fund, 5 years, 47x.
You know what? I'll take that as a short clip on TikTok, and we'll make it go viral.
Perfect.
Great.
Jamie, move us to Morocco. What's happening in there?
Yeah, the always up and to the right land of B2B retail suppliers. Very, very difficult space. But Chari, the Moroccan B2B, they've raised 12 million. I think it's the largest Series A raised in Morocco to date, expanding that platform that they already have existing, and also, as you mentioned off the top, Ahmad banking as a service offering integrated into platform as well. In terms of co-led by SB Capital, Orange Ventures, you see some of the usual faces: Endeavour Catalyst, Plug and Play, Road Keppel, Africa Ventures in there as well. Launched back in 2020, was a YC company, and I suppose they're trying to build out this kind of merchant super app, I think is the ambition. But it's a business model that's fallen on hard times. I think of late, like we saw Wasoko and Maxab, merging, was it last year or the year before, which very much seemed to be something out of necessity as opposed to necessarily ambition. Like Wasoko raised, was it 125 million Series B back in 22, 650 million valuation. I think that had been marked down at the time of the merger to something like 260 million. The combined entity now with Maxab is worth something in the region of kind of like 500 million or so. So now look, it was obviously a frothy time when they raised that Series B. But we've also seen it in the context of Chari and ShopUp as well. Now that's slightly maybe different. You could say that's an interesting sort of corridor between Bangladesh and Saudi, but it's not the easiest of spaces to be operating in. I think that's a pretty
The
fair.
margins are thin,
Yeah.
and it's really tough. Can one company really at their stage, can they do everything like logistics, payment, lending, and banking as a service? That's a huge scope. Can they really do all that, execute on all that? Xavier, I know you have some strong opinions on this.
Like me of it, but yes, no, you can't do all that with $17 million. I think if you look at their valuation when they last raised, I think they're valued at $100 million when they did their bridge round in January 22. I could not source what this investment or what price this investment is being made. Jamie, maybe you have some info on that, but I couldn't find anything. In January 2022, they had 15,000 shops. They talk about Morocco being a significant market for them and pretty much their only market right now, even though they want to go into the Francophone markets in Northern Africa. But they're talking now about having 25,000 retailers or merchants. I mean, that's not a huge growth from January 2022. So, and the reports are that, sort of 40% of these retailers are rarely active. So it depends how you count an active retailer, I guess, and how you value it. But, if you look at the other similar brands that have been operating through West Africa and Central Africa, you're looking at a fair value of 90 to 107 million USD. So unless they've raised money at the same price that they raised money in January 2022, which is obviously feasible, then it's not been a great 3 years for them. Having said that, and I'm sure Mustafa can talk more eloquently to this point, the banking license in itself provides them with a terrific moat and a terrific competitive advantage. And if I was in Chari's shoes, I'd spend that money to build up a modicum of interest and customer base and then flog it, because there'll be lots of people that are interested in coming into that market if they had the banking license.
Yeah, and I think one of the major factors to consider here is their relationship with the merchants. You mentioned 25,000, 14, 15% active. It really depends. And I think they're doing something right to be backed by all these institutional investors and whatnot. But I think the key question or the key answer to your question, Ahmad, whether they can do all of these, it really depends on three things. There's how strong the relationship with the merchants is. Are they actually very close? Do they see everyday problems, or they just give them the platform and they figure it out? Second point is how they're planning to execute all these lines of business. And the third part is, execution is number one, to be honest. If they have a good execution model, I think that would help them definitely go faster. And the third part is the strategy towards these line of businesses. Is it partnership, or are they going to do it all themselves? As you mentioned, banking, if they go into financing and banking and other money-related business lines, and if they partner with the right banks and the right channels, I think they would do the local merchants big favor. So if they go towards the part of partnership and working with people that already built strong line of business in these areas, would be much better, in my opinion, than doing it in-house or starting from scratch. And that way you can actually serve your customers in a quick manner, while obviously affecting your margins. Definitely your gains will be much lower, but at least you can protect your execution model and don't spread too thin.
Mustafa, let me stay with you here for a second. I was having this conversation with a VC here in Saudi earlier this week. We've noticed that so many of the B2B companies, they end up doing something in embedded finance. Why in the MENA region specifically? Everything ends up as a fintech company.
It sort of makes sense. I know it's trendy and everything, but I think also there are factors that make this a possibility. One of the major factors I personally noticed is that shift or the transformation in the licensing and regulation and becoming more open to allow companies and fintech companies to operate. You have in Saudi, for example, SAMA opened a lot of opportunities for tech companies to innovate and to transform the market. So that's one of the major factors. Before that, you're talking 6, 7, maybe 8 years ago, things were much more tight in terms of regulations and innovation and the fintech world. Second part is what I've seen also, which is something I've seen with startups. They start with a certain business model, which has good growth but low margins and not the greatest unit economics. When they build that market segment or they have this market share, they start tapping into financing and or fintech solutions because it has bigger needs, bigger demands, and also better margins. So it sort of makes sense to morph into that once you build your enough fan base of customers and clients.
What happens to the original payment companies and finance companies and all of these fintech companies? Are they going to eventually die because everyone else is doing the same thing?
I think there are a lot of people that are purporting to do the same thing as one another, attempting to go into the same markets as one another. And, as we've seen, particularly with the payments and fintech space, over time, there's a period of consolidation, and then, technology evolves and startups come to the fore, and it's a cycle. I've been lucky enough to be involved in fintech and in particular the payments industry now for 30 odd years. And it's a cyclical matter. The open banking regulations certainly help. We've seen, the rise of neobanks, and we've seen, quite a number fall away. So, and there's quite a number being acquired. So, how do the big banks disappear? They've got so much collateral at their disposal that they will acquire and integrate, some well, some badly, and move forward on that basis. But it's certainly, there is always a constant incentive to innovate and to capture market share. Having the license and being the first mover, as Chari is, fantastic. But from my perspective, that is where their IP, frankly, lies right now. It is in having that banking license. That's how they can command a premium to any prospective acquiring.
It is this proprietary data that they're sitting on as well, and that you'd like to think they should be able to underwrite quite effectively, and it should be a pretty low default rate if they were to go into the lending side of things as well. But look, I suppose it's all like the switching costs probably are pretty low at the moment as well in B2B marketplaces. So I mean, this all helps to that end as well from a stickiness perspective. So,
and Jamie, what we don't know is how embedded is
that's true.
AI and the anti-churn tools and these analytics into their workflow. We've got absolutely no visibility on that right now. I agree, it should be first on forefront, but we just don't know. So I don't know whether this is just a pre-acquisition strategy, or whether they truly believe they can go, regionally and internationally, and at the same time diversify their applications and their services. I think that's a lot to chew off. It certainly can't be done with $17 million.
But as long as they don't do it in an immature way, I think they need to take their time, understand their client's pain point, and build the right partnerships.
Jamie, we've seen Endeavor Catalyst in almost every regional success story so far. Are they becoming the king makers, or they're just the default co-investor in any good round, in every good round? Have you seen them as much as I've seen them so far?
Yeah, they do crop up frequently at the Series A, Series B. I would imagine nearly most of them that have taken place over the course of this year regionally, they have participated in. But yeah, I think they're just a really great co-investor. And look, they do have that opportunity because of the network and the sort of community that they've cultivated to, hand select, some of the most impressive deals. And obviously from a deal flow perspective, they get, eyes on everything. And so it's not, I don't think they find themselves in the most difficult of positions. They can be quite selective. But yeah, you are right. It is something that I've noticed as well. That, I'd be interested to see how many deals exactly they've participated in. I don't have an exact figure, but I'll get back to you on it. If I'm doing an end of year roundup, I'll try and figure that out. But they've certainly been abnormally active, I suppose, this year, you would say. There's definitely a noticeable uptick. But look, that's symptomatic of where the industry is as well, from a maturity perspective. We didn't see many Series A, Series B rounds the last 2 to 3 years. And obviously this year has been a breakout year. It's the most funding that we've had in the ecosystem to date in the first 9 months. So it's symptomatic of that in one sense as well. So I don't know how much you want to read into it. I think it's maybe.
I think it's the power of the network.
Yeah,
because of the network they have. Yeah, I mean, VC is a relationship business, whether it's the relationship with the founders or with other co-investors, and they have both.
It's a badge of honor.
So I think that's.
Founders, entrepreneurs really want to be, an endeavor entrepreneur. To your point, it's an amazing network, and it's one of these exclusive clubs that emerging markets, I suppose, have. So they've been super active.
They did not pay for this, by the way.
Is there anyone else sponsoring us today?
There is actually.
There is one sponsor. We will talk about the sponsor.
They're not,
but not Endeavor.
The IMX funds.
You're a sponsor now.
Watch out, Xavier. The invoice is getting bigger.
That's okay. Sorry, I should say IMX funds in partnership with 2PI Ventures.
Done deal. It's a natural progression for Endeavor because they have built a very strong infrastructure and network, as you guys mentioned, and they've been collecting insights for many years. It's very natural. I see it this way.
Well, with that, before we wrap up, let's mention our actual sponsor. Big thanks to OCTA for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is WEAREOCTA.com, and take control of your accounts receivable today.
With that, thank you so much, Xavier and Mustafa, for joining us today. And thank you so much, Jamie, for bringing us all this great news every week.
That was fun. Thanks, guys.